Hello, everybody. Welcome to Mrin Talks, my vlog where I take you through the steps of investing. Last week we discussed about gold, and in this vlog, I'm going to be talking to you about real estate investment. Well, there are many ways to invest in real estate. Of course, the traditional way is to buy land or to buy properties in terms of apartments or maybe a house or even a commercial property. Now, while land traditionally has given great returns, and I know a lot of people who've made like 20-25% CAGR in property investment, what we've seen over the last couple of years is that property prices have been stagnating. This is due to various reasons. For example, RERA, which got implemented, liquidity issues with builders, of course, the entire macroeconomic situation. Surprisingly, when one looked at the data from the RBI Housing Index, which basically measures property price increase across 9 cities, you actually find that in the last 10 years, the rate of increase of property prices has actually been falling. And, many people think that it's this 25% number, but the number is more closer to a 6.7 to 7% is what the last 5 years increase has been, right? And property prices still remain very high. It's still very difficult for most people to afford a house without a loan. So here's the deal on property. First and foremost, buy the house that you want to live in if you feel that you want to have a house of your own, because certainly when you're buying it with a loan, it's actually costing you double than what it should really cost you, right? Never buy a second property as an investment on a loan, because the price increase in the property is actually going to get set off by the interest that you're going to pay on the loan, right? Now, there is a new way to invest in property, and that is through the real estate investment trust. So, what is the REIT, as the short form is called? Well, this is like a mutual fund which basically holds a lot of properties. Typically, it'll have commercial properties in it, and there are three ways that you can actually get income from the REIT. So, one is a dividend. So, rental income can be paid out as a dividend. There is interest income, and there is also gain while selling the unit, right? Uh, Now, typically, REITs are very popular overseas, and that's because, first of all, the capital outlay that you have towards a REIT versus an apartment is going to be much lower. Secondly, they provide stable returns and higher returns as compared to fixed deposits, but this doesn't mean that they're without risks. Clearly, when you are investing in REITs, you have to see who's managing the REITs, what's the sort of property that they're holding. Right now, there are only three REITs in India, and most of them are holding commercial spaces which have been rented out to very good corporations for periods of 5 to 10 years, basically. One must also keep in mind the tax structure on REITs. So, REITs have a very complicated tax structure. So, the dividend that is paid out is tax free in the hands of the investor, provided that the company is not for taking the lower taxation. The interest income and rental income, if it is paid out as interest income and rental income, that is taxed at slab. There might be a repayment. So, for example, the REIT might exit an investment and decide to give you a repayment. That amount is tax free. And finally, when you exit the REIT, long-term capital gains kicks in after a period of 3 years, and the rate of long-term capital gains is 10%, right? Should you look at REITs right now? Well, I think you should start watching it. Certainly, they're much higher fees than your normal mutual funds. So there are a couple of things that I would like to say, that when you look at it from an overall portfolio perspective, the first thing you need to see, what is my overall real estate exposure. If you already have 2-3 properties, then I would not recommend investing in REITs, right? Because you don't want to have very high exposure to one particular asset class. Now, let us say you only have this house that you live in, so let's keep that aside. Then you might want to look at a REIT, but look at the REIT, look at the structure of the REIT, the experience that they have in managing a REIT, what is the tax structures that they are following, because that's going to impact your returns as well. Um, Currently, the yields are not all that attractive on REITs. Most of the REITs have yields in the range of about 6 to 7%, which are partially taxable as well. So I would say just wait and watch right now. Let's wait for more players to come in. Let's see what's happening on the interest rate cycle, because certainly interest rate cycle is going to have a huge impact on REITs as well. So let's wait and watch as to what's happening overall before taking a decision to get into a REIT. Make sure you click on the bell icon to subscribe. We do look forward to your feedback. Till then, bye bye.